uh, there are a lot of questions that I have that have been crowdsourced from our audience. Some questions of my own, and in between we'll take our time to take some more questions that come in the chat. So you know just to get everyone started and get everyone on same context, if in your own words, I would just want to have a quick intro, maybe starting with Nipun. Just a quick intro in your own words of what your so we've learned about you, but just what your respective companies are doing at the moment, and the problem that you're solving. If you could have just a quick one for everyone to get acquainted, you could start with Nipun. Okay, I think Nipun had an issue. He just dropped off. Gaurav, could you start with you till Nipun comes up?
Yeah, sure, absolutely. So, hey guys, this is Gaurav. Excited to be here. Good to also be seeing a bunch of familiar faces. So yeah, I think quickly about us. So me and my co-founders, we used to work together at Grab before. So we were there for a while. It was a fantastic experience for us seeing, the experience of building products across so many countries, taking into account so many local challenges. So how do we personalize the products, but yet keep it scalable, etc. Obviously, a lot of these were AI driven. And that's somewhat where the inspiration came from, where we noticed there that a lot of the solutions that are being built in AI are actually fundamentally designed for, let's say, Silicon Valley or the US or Western markets, but they never quite work really well in this part of the world, or actually for that matter, in any emerging market across the globe. And that's where the idea came from, where we felt taking some of the inspiration and learnings from what we saw at Grab, can we enable other companies to help tackle AI problems? So this ranged from super tech-enabled companies, obviously like Grab, but also very traditional enterprises. And so we are going sort of vertical by vertical. We have a couple of different verticals now in place. The first one we are building is solutions around maps, where working with companies across a bunch of different sectors and helping them with location problems. So for example, route optimization, how do we help them with better potential distance time estimation, better data, a bunch of different things. So yeah, that's sort of a super high level about me and the company. And yeah, would be happy to share more about how the journey has been.
Awesome. We'll get to that. We'll get to that. That's a very clear introduction. Thanks, Gaurav. If we could go with you, Chinmay, just a brief intro on BukuWarung.
Yeah. Hey, everyone. Glad to be here and looking forward to sharing whatever I can to, soon to become founders or aspiring founders. So yeah, BukuWarung. So I'm Chinmay from BukuWarung. We started BukuWarung last year. BukuWarung is an accounting app for small and micro merchants in Indonesia. Our mission is to build the digital infrastructure for 60 million MSMEs in Indonesia. We have started with bookkeeping and payments. We have scaled to almost 1 million merchants now in the last 1 year or so. And we are hyperscaling despite COVID this year. And we recently raised, like pre-Series A from one of the top global fintech investors, Kona Capital. And then, as Weber mentioned, we are going through the intense YC program right now. It has been a lot of learnings, and I mean, looking forward to sharing, some of that insights with you guys.
Got it. Hey, great to have you, Chinmay. I think Nipun has joined in. Hey, welcome, Nipun. I think the only person joining in from the office today.
That's what it looks like.
Yeah. Or is that your background? Is that your Zoom background?
Yeah, it is a background.
Oh, that's your Zoom background. Okay.
But it is our real office.
All right. That's a good makeshift then. Hey, Nipun, so, just a brief intro of, what you guys are doing at ULA, and then we'll get on with, more questions.
Yeah, the way to think, the problem that we took on is a rather interesting and massive one. So it's always fascinating, since many people here are from India, I can see, and maybe from folks from Indonesia. So broadly in emerging markets, what you see is that retail, the sector of retail is usually runs into hundreds of billions of dollars. In Indonesia, it's probably 300, 400 billion. In India, it's about 600, 700 billion, maybe more. Someone said a trillion once. I don't know what to believe, but either way, very, very large numbers. And most of the outlets are actually unorganized, fragmented mom and pop stores, irrespective of whether it is a grocery store or a clothing store, electronics store, F&B outlet. For the most part, unlike the Western markets, you'll see a lot of fragmentation, and it's super unorganized. So, and on the unorganized sector has its own things that work for them and things that don't work for them. The things that work for them obviously are, they usually have a catchment area, and in that catchment area, they know their customers well. They are usually running shops out of their own home, very low cost, very low cost kind of models, because there's literally no rent, no employees, nothing. And you'd imagine that someone who has a cost advantage like that should be able to outcompete modern trade, because modern trade, on the other hand, has tax issues, employment benefits, et cetera, but yet they don't, right?
Mm-hmm.
And so the problem that we set out to solve is to say, okay, in the smartphone era, how do you take traditional retail and reimagine it so that you can bring all the benefits of modern retail into the cost structure of traditional retail? And there's a number of benefits that end up that are for them. But just to keep this already long introduction short, I will stop here and just say Ula is a marketplace where we solve for 4 things: selection, service, quality, and credit.
And you solve those for the merchants.
Correct.
Got it. Hey, thanks. Good to get that introduction, everybody. So, we received a lot of questions during signups, right? And one common theme that I see, and which intrigues people, is, why does a particular founder, let's say, choose a particular market or a particular idea? Maybe I'll start with you here, Nipun. I mean, you were an e-commerce guy who then moved to fintech. You've been an investor, you've been angel investor, you've been at Sequoia. How did this person, who was perhaps a comfortable investor of funding startups, decide to, get a startup headquartered in Jakarta and solve a problem for merchants in Indonesia around e-commerce? Like, how does that happen?
It sounds pretty crazy, isn't it?
Yeah.
Like, why would you ever do that, right? But I've done a couple of crazy things in my life, and certainly this is not one of them. This is actually fairly thought through.
Mm-hmm.
Obviously there is a strong element of chance in a lot of things. So e-commerce in my life started a long time ago. My first job out of grad school was Amazon in the US in Seattle. And which is where I met one of my co-founders, who incidentally is also hiding over on this chat, but only to make fun of me as on our Slack channel. So yeah, but anyway, so I started with e-commerce over there, and then at Flipkart that theme continued. And when I joined Sequoia is one of the early investors into companies like Gojek, Tokopedia, Traveloka, and a bunch of others, right? So I was sort of exposed to Indonesia. In fact, I worked on the Traveloka deal myself. So Indonesia is, and obviously all the numbers were looking great, the size of the market, the adoption of technology, et cetera, et cetera. A lot of the ingredients were coming together, right? But you have to, when it's one thing to be an investor looking at numbers, and it's another to be a founder building from the ground. So I needed so when it was suggested to me through a friend of mine who incidentally also works at Sequoia, that I should go and explore whether Indonesia might make sense, I wasn't averse to it, because it wasn't a big surprise to me, because obviously I was friends with the Gojek guys, I know a bunch of other people as well. But it was important for me to do my own homework, my own research. I must have talked to hundreds of retailers through multiple trips to Indonesia, um, and tried to understand from my own lens of e-commerce and retail, what were the core issues? And turns out, in hindsight, no surprises, but at the time I was pleasantly surprised that a lot of the issues and the problems are very common to India. So it's the same stuff, same issues keep going over and over. And that's also largely because the industry structures have evolved in a similar way. So that gave me a lot of confidence in terms of being able to build something. I was also lucky to have some phenomenal co-founders, which we will talk about later. When you look at our team, we're fairly complete, and that is extremely important in a startup. Is the amount of risk that you're taking otherwise, you need the people who are in it with you and for you.
Got it. So although you are not directly based here, you had enough exposure to the Indonesian market and the problems through your investments and the network. And then I guess your co-founders helped fill the rest of the gap, which may
Correct.
have.
But I don't want to, sorry to cut you off, but I don't want to underplay the value of going in the field on the ground for months at a stretch and talking to customers.
Absolutely, absolutely. That brings me, so now, moving on to, Gaurav and Chinmay. I guess Gaurav and Chinmay, I see, the two of you, both of you worked at Grab, of course, different teams and different times. And maybe we'll start with Chinmay, who probably started off, he started off last year. You started off last year, September. You worked with Grab, worked with Carousel, both companies that are dominant in Southeast Asia. So was for you as well, was it just, your experiences sort of lending into a problem statement, or did your choice arise out of, let's say, a passion for a particular problem?
I think a combination of both, right? So when we were thinking about starting up early last year, right? Me and my co-founder Abhi, we looked at, I wouldn't say this is the first problem that we looked at solving, but we were well aware of our strengths, which is like we are strong product and tech guys, and we wanted to build a business, chase a model that is where we can leverage our strengths over the last few years, working at Grab, Kudo, Carousel, and working in Southeast Asia and Indonesia. And given the experience, I think we were well aware of also of the opportunity that exists in Indonesia, all the massive changes that have happened in the last 5 to 10 years of digitization. And I mean, being at Grab, I got the first-hand experience of seeing that happen, right? Secondly, my personal experience was a lot more focused into into working very closely with drivers, merchants, warungs. So primarily spend time at Grab and Kudo building products for the segments, right? And I mean, we have been on the ground hundreds of times in Indonesia for personal and professional reasons. And also, so I think all of that experiences and building for this segment was something that we knew. So that is one. And second thing was also, I mean, personally, we are coming from very humble, small merchant families in India. And I mean, building something that building a business that eventually creates a lot of social impact was important to us, and a lot of scale for millions of people is also important to us, right? Impacting millions of people as we build the business from ground up. So I think a bunch of those things combined with our experiences and I think a little bit of a nudge from our mentors at Carousel sort of brought us together, and then we started working on this idea. And I mean, as Nipun mentioned, right, we went on the ground, spoke to close to 400 merchants across 3 months last year, and then we went ahead and launched our app, right? And so I think I will share a bit more about that, of what was the evolution. But yeah, that is, I think, being on the ground, especially as non-Indonesians, building for Indonesia, it's a very hard problem. Like even though we have worked for several years in this market in Southeast Asia and Indonesia, you do need to have a very strong local presence, strong local understanding. And we have put together a very strong local team that understands and is very passionate about building and solving for MSMEs in Indonesia, and solving and empowering them over the next few years.
Got it. So, all right. So, a mix of both the work experience and personal background. Gaurav, for you, was it something? Would you say it was something similar, or as in uh, why this particular problem on NextBillion.ai? You guys are in a slightly different space than say Nipun and Chinmay, and your customers are probably much bigger enterprises or even startups, but definitely maybe bigger than some of these smaller stores and merchants. And at Grab, you were probably working for a very B2C kind, transportation space. So how did that, how did you guys then decide to, land up in this space?
Yes, I think this is my second startup. So I've done one startup before in B2B as well. So there's some preference for doing something in that space from before, but I think for us, it was partly driven from, I mean, we saw a lot of success building, different AI solutions inside Grab. And one of the things that was happening is there were a bunch of different ways we were accomplishing it. And this is probably getting a little too operational in details, but what we saw was a bunch of organic interest, from a bunch of different groups. So we were working for the Maps team, me and Ajay. So we saw a bunch of interest from different teams to say, hey, the kind of model you've built for the Maps team, can you replicate it for a bunch of other teams inside Grab? And similarly, we also saw interest, again, at conferences, etc., from companies outside who were saying, hey, you've done something fairly unique in Southeast Asia. Can we partner together, and can you help us either do the same thing? We're trying to do something different, but can you help us do this in Southeast Asia? Or, hey, what, can we collaborate in some way so that I can do this in another market, I don't know, Africa, for example. So there was sort of this organic interest in something meaningful that we had built there. And then, so partly from that, where we, it's not that me and Ajay, when we started, were actively thinking about that, hey, I want to do a startup. It was fairly organic. Thought came that, hey, this could be an interesting opportunity. For us, it was, again, it was fairly obvious that, AI is a fairly large market, but we did not necessarily scope this out, with, tons of research, at least at the beginning. It was more like, we knew there's an opportunity there. We were fairly confident we can get a few early customers. And it was a little bit of a trust on ourselves that we'll figure out some of the specifics as we go along. And we are very passionate about this space. I have basically done different forms of AI all through my career, and well before AI was a buzzword. So yeah, I think it was a combination of just passion for this space, seeing an initial opportunity. I guess at some point you have to just go for it. So yeah.
Got it. I like the way you phrased the ending, right? At some point you have to maybe just go for it. So I wanted to dig a bit deeper into this. Often people talk about, hey, taking a plunge or a particular point when you decide to start up. I just wanted to, ask a more practical, realistic question to you guys. And anyone could answer this. Is there really like a point when you decide or you take a plunge, or in your experience, has it been more of just a step of methodical approach or a planned out process that led to things? Or is it really just, okay, I'm quitting my job and I'm starting up? Where do you relate your story to? Any of you could start.
Okay, maybe I'll start first. So I think for us, it was definitely a little more sort of, organic serendipity kind of a thing, as opposed to something that was super planned. There was definitely this feeling that, and I think we loved our jobs at Grab, both me and Ajay, but there was this feeling that, okay, we'd been there for a while. Obviously, Grab has become much larger, and obviously, consequence of its own success, has become much larger an organization. So it wasn't sort of the startup we joined when we knew, when we joined about 4 years ago.
Yeah.
So it was just this thing that, okay, we had spent, a few years, should we be thinking of something else? And then this sort of, idea just came organically. I guess personal circumstances are an important thing when starting out. So it just so happened that, both for Ajay and me, both of us were recently married. Felt like, there's still some way to go before we take on additional sort of personal responsibilities. Had some money saved up, so it didn't feel like financially it would be too much of a strain to do something. So yeah, and I mean, we felt passionate about the idea. I don't think you can hyper analyze everything to ensure that every single aspect of things is in place. But it felt like at least a few big pieces were in place. It felt like for what we were thinking, based on our relationships, we felt fairly confident we would get a few early customers. And then after that, I think as Nipun was saying, there's element of chance in everything, but it felt like, risk adjusted, it felt like a reasonable bet to take, both from like a purely sort of professional perspective, but also just personal perspective, that if you ever want to do it, now is, at least for me and Ajay, it felt like now is a good time.
Right. So it wasn't necessarily like, okay, look, I just want to start up, I'm taking a plunge, but there was also not, let's say, like over analysis on your part as well. So modified from same question to you, Nipun, because for you, you were already like dealing with startups like every single day. So for you at that point, did it feel like, okay, maybe I should just do it myself? Or for you also, you just sort of just lean into it? I'm coming from a point of view, a lot of people ask like, hey, should I just quit my job, or should I just do this? Or was there a method in your case as well?
Well, again, it's a bit of both, right? So the first time I tried a startup, it was when I was still in college, and the reason why nobody knows that is because it didn't go anywhere. So, duh, right? But there was always that thing in me that I did want to do something, and what that something means is the way I thought about it. Okay, and everybody thinks about this differently. So it can be everyone's own perspective. Someone's in it for creating wealth, someone's in it for creating impact, someone's in it for different reasons. For me, the reason was, in fact, just to say that there is a certain skill that I have, and I wanted to make a dent in the world, right? And now that's a lofty statement to make, and I understand that, because there is a practical steps to getting there, and that is where the second part of your question comes. Is like, what are those practical steps? Now I've of course, I took an inordinately long time to get here. But that is because for a long time I was not ready. I just didn't internally feel ready for it. It was only around 2000, and I would say when I was leaving Sequoia, when I really, really felt like maybe the time was near. And then it's not something I can put in words. It was not driven by excessive logic or anything. I just felt ready. Right. So, and I was one of those people who quit my job without knowing what is coming next. Right. And I don't feel like that is a bad thing at all. It does require a lot of courage, and many folks are not ready for that. So for that, I know of people who've sort of left their jobs, tried something, didn't work out, went back to a job. That's also okay. So it's none of these things there is no playbook for any of this. It just is a very personal thing that happens or it doesn't happen.
Yeah. So maybe a point to note for the audience: there's no playbook here, right? So we see one person who probably leaned into it gradually, and Nipun says, "Okay, I just went in." Coming to you, Chinmay. Chinmay, I think maybe I'll ask you something slightly different here. There's of course, there's that aspect, and you explained about, how your experiences led to an understanding of the market problem and so on. I want to start off by, maybe just talking about those first one or two steps. So for you, what came first? Is it, hey, I'm going to do this, I'm going to approach this idea and leave my job? Or did you get a co-founder? Did you try to get a team? Was there some early validation? And what is that process like for you?
Yeah, that's like a little bit of a deadlock, right? To which one to do first. Like there is no right answer here.
Yeah.
But for me specifically, how it happened was I quit my job from Carousel. As I mentioned, there was a nudge from our mentors at Carousel who were senior leaders there. Uh, and basically who eventually backed us in, angel invested in us for the first angel investors. So yeah, they basically nudged me and Abhi to sort of start, right? As we
Both
thought.
of you knew each other at Carousel. You're
So
working
we knew each other at Carousel. We spent close to a year working together. And then, I mean, I had no idea that Abhinay wanted to start, but inherently our mentors knew that, that deep down we would be good fit for each other, and like sort of, they saw us like as personalities. They just gave us guidance that, you should just go and start, right? This is really like your personality. You wouldn't be happy doing another job. So so that sort of nudge helped. And secondly, then I mean, again, being product guys, we really wanted to understand what the problem and the opportunity exists, right? On a high level, macro level, yes, as Nipun mentioned, it's a multi-billion-dollar opportunity. But unless you have been on the ground, you have sort of taken that like time to understand your customers. And in our case, it was small warung, small merchants across different parts of Indonesia. And we traveled around Indonesia for 3 months, spent time with a few hundred merchants, understood their problems, and then launched like an MVP in form of a bookkeeping app, right? And so initially it was only me who had quit, and then my first engineer and Abhi, who is my co-founder, hadn't quit, but they eventually quit once we had some certain level of validation. But yeah, that is the story in our case. But for it is very dependent on who has what level of risk appetite, who has what level of conviction, and personal situation also affect when do you quit and when do you start, or if you could even start, right? It is very dependent on your financial situation as well, your family's situation, if you are supporting them, if you are married. Like as Gaurav mentioned, right, there is so a lot of nuances to it. But yeah, I can only share what happened in our case, and then hopefully there is some learnings from there. So for us, that product validation came when we launched the app in September. We started seeing organic growth. That product went from 0 to 50,000 in a few months, and it was bootstrapped, right? We hadn't raised any funds because we were still validating the problem and the opportunity, and we iterated the product multiple times before we sort of went out in the market and raised funds from investors, right? Because when you raise funds from investors, that's when you truly have started. Like that's when you have to fully commit, because you can't not commit after that, right? So I think that is also a nuance that early founders need to understand. Is that you can always quit your job, you can go and work on a problem for 6 months, it doesn't work out, you go find another job, right? But if the moment you take money from investors, it becomes serious. And for us, that happened early this year, and we have raised like multiple rounds this year. And I mean and scale pretty aggressively since once we have validated the problem that this opportunity exists, and we have to chase it and go aggressively after it.
Got it. So when you say that you were, maybe I'll sort of just transitioning to the next part of this. You and Abhinay, your co-founder, were ready to do it, and then you said you also hired another engineer. So effectively, before quitting, did you already have some early team members?
Not really. The engineer was helping us, was one of our very close friends. He was helping us. I mean, the way he's like a ninja, so he was able to do the work of 3 engineers, but he was doing it all with his full-time job. So he built the entire app, the front end, back end. We iterated multiple times on the app until like Q1 this year. He was the only person who we had, and he has joined full-time now. But yeah, I mean, it is great to have that well-rounded team, as Nipun mentioned, right? Where I was doing product, Abhinay was doing, like was more on the business side, and partnerships and fundraising we're doing together. And then my first engineer, basically our close friend, was driving all the tech side of things, right? And that team of 3 sort of raise the seed round and the angel rounds this year, and then we sort of scale that team to what we have right now.
Got it. I mean, I'll ask the same question to you, Gaurav, because in your case, it's you and Ajay, and then you have a team I think, a team in India. You have a tech team that's forming in China. How did you guys go about, doing that team building process?
So for us, it was, it was just me and Ajay when we started. But again, I mean, one of the advantages, I guess, of doing something when you're older is you have a bit of a network. So, there are enough people who will, who are interested, who just over the years have expressed interest in working with you or some such thing. So for us, it was more like, hey, Ajay and I started again. The part we were fairly confident about was, again, at least building an initial team, etc., wouldn't be that hard. So it's mostly, everyone who joined us initially was someone from our personal networks. And then obviously then as Chinmay also mentioned, once you raise money, then, we've been fortunate to raise from Lightspeed. We shared the same, Nipun and I, we shared the same investors. So yeah, I mean, we were fortunate to raise from, top tier VC fund. And then, that also helps, they have their own networks, so they help out as well. But I think for us, absolutely the initial hiring, all of it was purely from our personal networks that we've accumulated over the years.
All right. And that includes, I mean, I know your tech, your tech co-founders were also, sort of colleagues at Grab, and that helped. So just tapping into your colleagues, I guess, for both of you. But Nipun, so that's, now I'm interested, right? So for these two who were in the industry, it was sort of just at that time, they had their colleagues who were working with them. Your case, probably as an investor, you have an oversight into a lot of things, but for someone with your background, was it easier to build an initial team, or was it tougher because you're not directly working with a lot of people in the industry at that particular point of time?
No, great point, because I mean, it's less about the industry and more about the region.
Yeah.
I obviously I knew some people in Indonesia, but those are founders of big companies themselves, so it's not like they're going to come join us, right? So that's a different. So for me, it was definitely different from Chinmay and Gaurav. Very different. Incidentally, none of the four of us, like as in like the other three guys, none of that happens because of my VC network.
Okay.
So Alan, who is our CTO and co-founder, he and I worked at Amazon together. And that was way back, right? And we sort of stayed in touch for over.
You guys were in Seattle, right?
Yes.
Okay.
Yes. And Alan was working in Booking.com in Amsterdam when I sort of randomly met him in Amsterdam in 2018, and we sort of reconnected and got along and so on. And a lot of my idea evolution was happening in parallel, independent of Alan. And I hadn't even met my other two guys yet, Derry and Ricky. So Derry came through an introduction of a friend, and both of us hit it off. And he's obviously a great guy. And Ricky actually, incidentally, was referred through. He was coming towards the end of his current stint, and he was actually referred through a headhunting company. Ironically enough, like it does happen. And he's a former founder. He was also at Lazada. He knows ops, great guy, right? So between the four of us, our skill sets turned out to be complete. Now it may look easy, but to be honest, like I met so many people in the process just to see where that chemistry strikes. I think there was also a question on the side on co-founders. This is as much art as it is science. You're solving for capabilities of people, of course. Because you want to have people who have complementary capabilities, but more than that, you need chemistry and trust. Okay, and that chemistry and trust is not an overnight thing, or it's not like an employment thing. You either have it or you don't have it. The acid test is, do you go to sleep peacefully at night knowing that the right person is solving the problem, right? And when you get that vibe from someone, and along with the passion, so Derry, for example, actually all of us have startup backgrounds, right? You talked about me, but Alan worked at a couple of startups after Amazon as an early engineer. Derry was trying to moonlight his own startup. Uh, and Ricky ran a startup and sold it to another company. So all of us had that mindset. And that mindset is super important and hard to find.
Got it. Got it. So maybe, so that, we are going to talk a bit about, raising funds, COVID-19 and some other things. Before that, I'd like to take some questions from the attendees. There's a bunch of questions that have been trickling in. Okay. So the first one is from Anurag, and this is for Nipun or Chinmay. As in, how did you guys break the language barriers or local cultural barriers while you were conducting your market research or on ground in a market that's a bit, you can say it's a bit foreign, even though you might have working experience there?
No, for sure. I didn't even have working experience there.
Yeah.
Right. And it is a barrier. And the way I got over the barrier was finding people who were bilingual and making friends with them and taking them along, or at least in a couple of instances, hired a translator. Translators are not that expensive. Like our translator was an English teacher, I think. So it's, and the guy is able to talk and translate. So look, it's possible to do. You just have to find a way. And now that we have, two co-founders who are Indonesian, it's less important, right? If there is ever a situation where they need to deep dive and figure it out themselves, and if language is a constraint, like for example, you're trying to problem solve for a customer, and a customer is like a store, right? So you're not expecting some sort of English language expertise over there. They will do it themselves.
Got it. Let me take a couple more questions. There's a lot of questions. I'll take a couple more before we leave some towards the end. All right. I think there are two questions that sort of fall along the same lines. Okay. These are from Siddharth and I think H. Zaveri. So I guess the two of them are asking around this. It seems like a decent question. Like, somebody who's not yet started or is thinking of starting up, and people do get stuck. They're like, not making enough progress on this idea, or I'm not technical enough that I cannot build my MVP and I don't have a technical co-founder. What could be the directed question here is, what could be the step towards, maybe, or rather what steps can they take towards getting to that MVP? So these are, say somebody's not technical, is feeling stuck, not making progress, a bit frustrated, don't have a technical founder. What steps can they take towards getting to that MVP? Any of you could share light on that? I mean, you guys, Gaurav, Chinmay, you were probably like product guys, but you did have engineering background. What would you advise to someone in this situation?
Chinmay, you want to take this?
Yeah, sorry. Yeah, so I can take that. So in our case, we actually built an MVP, but fortunately, the MVP was not too complicated. It definitely required tech. So we sort of convinced one of our close friends to help us out. But I think generally speaking, there are multiple ways to validate the problem, right? And I think that is what your goal should be before starting, right? To understand what the problem is, and then how does your MVP in whatever form it is solve the problem. Try to tap into your networks. If you don't absolutely have first, second, or third degree connection with engineers who can code, then go work with an agency. And there are a lot of and they also come in not very expensive, right? You can get one or two engineers from an agency to sort of work and build out that initial MVP. But I think the product and the problem scoping and all of that needs to be done by you, and then you just like get someone to implement what the solution is and then validate it, right? If you are absolutely not coming from like a technical or background, or you do have zero connections to someone who has done tech.
Got it. Got it. All right. I think that should answer your questions, Siddharth and Zaveri. I think there are some questions around agencies there as well. If not, you guys could just raise your hand. We can open your mic and you can ask a clarification question. Okay. Maybe what I'm going to do is I see the remaining questions are sort of around coming to the money part of things. So maybe I'll begin that. So this is a tricky situation, right? Like in just simple words. Now, all of you have luckily raised funds. You're still in maybe less than 1 year old. You've been able to raise funds and so on. For you, how did the process of raising funds for you? I would say, when exactly did that start? Is that you've got an MVP, something working, or you just went out to an investor outright? At what point did money come into picture? If any of you could start, maybe Gaurav, Nipun, if any of you have.
Sure, yeah, I can start. So I think in terms of money, I would say, and I think Nipun is probably, given his investing background, can answer this in a much more structured way. But at least my personal view is, at least at an early stage, fundraising is about two key things. The first key question is, are you solving a problem that's valuable enough? That there is a belief, or you can convince a potential investor that, hey, this is a valuable problem that somebody will pay for in whatever way, be it actually pay a lot of money for, or I don't know, you're doing something more consumerish that is people will actively spend their time and engage with it, etc. So is it a large enough opportunity? And the second thing is, what is your unique, like, why are you, your team, your experience, and everything else uniquely positioned to go after that opportunity? So I think early stage, at least in my view, is primarily about these two questions. The burden of proof is obviously on you as an entrepreneur to convince the other person that, hey, to the degree that they want to make an investment in you, the burden of proof is on you. So some people may not need to establish as an example that, hey, we are unique in this space, because maybe they have a lot of prior experience in that space, and they can just go out and raise some money just on a deck as an example. If you cannot prove, let's say, the second question well enough, so in that case, you probably need to build an MVP, maybe get some traction at least, and then that's a proof point that, hey, look, whatever thought or concept I have in mind, people are paying for it, or people are using it, etc. So think of it, I would say, more in terms of, imagine if you had a scorecard, what are all the things, that give you extra points? I don't think there's a hard and fast rule that you can or cannot raise money at a certain point. So that's sort of my thought on this.
Got it. I'd like to dive a bit deeper into this with you, maybe Nipun, because you've been on the other side of the table as well. So you recently raised a Series A, over 10 million, and of course before that there were other rounds. At what stage does a founder, or is there no hard rule, or at what stage does a founder go and just approach an investor, okay, give me this much money because this is the stage where I'm at? And then at what stage would you say, okay, now we are probably ready for a bigger round? How do you see that in your experience, both as an entrepreneur and as former investor? What would be your advice for the audience here?
Yeah, so look, my personal story is slightly of an aberration. It's a little different. because there's not that many people. I mean, there's very few people, very few founders who've been on both sides like I have.
Yeah.
And obviously with that comes a few advantages, but I'll try to take a generic step, but so it's a minor correction. We've only raised one round.
Okay.
That's it.
Okay.
Nothing other than that one. Look, so over a period of time, there's a few things that you're in any early stage investor, and I've been one of those before, and I still do angel investing, and in that process, I get to learn a lot from the upcoming founders. So, what are the few things that people are, anyone who's giving their money, their, especially if you're an angel round, then it's a hard-earned personal money. Even otherwise, it's a fairly hard-earned money. There is a sense of conviction that is required, right? Where does that conviction come from? So, like Gaurav was saying, is the problem valuable enough? Is there something? Has something changed in the universe that this is the time to build something like that? Another area is, are you the right person for the job? So if you are a chef trying to build an enterprise security company, people will ask questions.
Yeah.
So there has to be some reason why a track record of something which says that you can deliver in that space. The space I have picked is e-commerce, and between Amazon and Flipkart, I think I know as e-commerce as well as anybody would, right? So it's less of a credibility issue in my case. So similarly, if you're to pick something which people can believe and see that you are capable of solving that problem. So first is, what is the problem? How big is the problem? And are you the right person to solve that problem? Right now, if you now there's after this, there's about two situations that can happen. One is a situation where you're a fairly new entrant, so to speak, in the ecosystem, and nobody knows you. So where in that situation, people are trying to build credibility around you. That people are watching, right? Investing is a very long-term game. Most investors don't want to, just uh, simply put money behind something, because it also locks them out of someone else. So tomorrow, if a better ruler comes along, uh, my investors would have lost out because they would have been blocked from investing in another company. So they have to feel sure that you are it, right? And some of it is their judgment, some of it is how you present yourself, and so on. And then I think the final thing, which is also very, very important, which also I think Gaurav was alluding to, is not just your own track record, but your ability to hire and raise more money.
Yeah.
Right. So if you are, let's say you raise a good friends and family round, but the story, the vision, the execution track record to back the story, that has to follow for a institutional investor to invest in you. And that is demonstrated by how well are you able to pitch to, let's say, good quality employees. So if Chinmay talks about his first engineer, who's a close friend, the close friend probably had a lot of other options and a lot of other places to go. Why did he choose to join Chinmay? Right. So these are the kind of signals that you try to pick up. So it's never a full science, but these are somewhat of a broad framework about size of problem, value of business, track record, etc., which most investors will look. And in my personal case, look, I've known my investors for at least 7-8 years, so they've known me for that long. So it wasn't like, oh, here's someone who came in and with just a deck, actually didn't even have a deck, raised a big amount, because there was like 7-8 years of track record that predated that fundraise.
Got it. So there was this existing network. So maybe I'll move on to another aspect of this. So raising funds is one part, and then but normally you guys have, since you guys have taken the the venture capital funding growth, there are these expectations, there are exits, there are expectations of the next round, and I found a really good question coming in. Are you in your respective business models, what was a bigger factor? Like, are you doing this as something that, hey, I'm really passionate about this, or this is going to change the world? Or is there a plan that, hey, or a realistic plan in mind that, hey, you know what, I might exit at this point, or I'm only doing this because the market seems to be good enough, otherwise I wouldn't do it? And does getting VC funded sort of play with this in some way? If, maybe Gaurav, if you can answer that, or Chinmay, because yours is a very different field from, helping the smaller players. You're really working for some bigger corporations as well.
Sure. So I think the reality is, so I think if you raise an angel investment round,
Yeah.
so if you're running your company bootstrapped, you are the owner, you decide however you want to run this, right? Like there is no expectations necessarily on exit at any point. It's up to you. I mean, that's how lots of companies around the world have been built. Tata's built us. I don't know, lots of companies here in Southeast Asia, across the globe. Uh, Traditional businesses, it's up to you. If angel investors also, friends and family, etc., they invest for all kinds of reasons. But if you ever raise institutional capital, it's just a clear expectations that you're bringing with yourself a responsibility for some exit at some point in the future. Now, there are some thumb rules, etc., of what a typical funding round, comes with an expectation of. But the idea is you're taking money from investors who have raised money likely from someone else to give them a financial return. So you absolutely, in my view, at least need to be realistic about this thought process that there has to be some exit at some point. Now that exit can come in a bunch of different ways. Now, personally, at least for us, it's not that we have thought actively about all possible exit scenarios or what a specific exit can look like for us, but it is definitely a topic once in a while we think about. And at least what we are trying to do as a company is how do we build optionality, essentially, that if, as an example, we want to take this to IPO. What does that mean, right? Like we want to ensure our growth rates are good. We want to ensure that we're not burning too much money. We are, at some point in the future, there's a reasonable path to profitability. Can we also keep in mind like strategic options? Are we working or have some partnerships with larger companies who in future could be interested in acquiring us? Also keep in touch regularly with future investors, to allow for more fundraising. I don't know. I mean, maybe some people can see far into the future. I don't think at a very early stage it's very easy as a 1-year-old company to see 5 years into the future. But
So being realistic about it.
Exactly. It's really hard, right? Especially given how quickly technology changes. I don't know if it's, that easy to see that far into the future. But I think at least what, we try to do is and it's not like a weekly or a monthly conversation, but every once in a while we do sort of think that, hey, are we building enough optionality for all possible exit options in the future?
So I'll quickly move to the next audience question. It's an interesting one. About 3 people have shed light on same. And I want Chinmay, I would like to know your view on this, because your customers are probably among those that are the most severely affected by COVID-19, right? And as somebody who's helping out these small shopkeepers or warung owners, how has the business and the attitude of your customers and investors changed in COVID-19? Like, what should somebody in these kind of industries now be looking to do?
Yeah, good question. So I think, like for us, as I mentioned earlier, right, we have been fortunate to grow quite well despite the COVID situation in the last 6 months. And actually, most of the small businesses, micro businesses we serve, a lot of them are running their, like a grocery shop or a mini market or a mobile top-up shop or laundry shop, or like, so some of the businesses have been affected, and we have seen like dips in some of the business categories. Like for example, restaurants, like it's called warteg in Indonesian, which is like a small eatery where you go to eat your lunch. Those have sort of taken a dip, and some others as well. But some others like Pulsa top up or mobile top up shops, because that business, that you don't need to necessarily be at the shop to top up someone else's phone, right? So everything is happening remotely. A lot of businesses that we serve have started selling on Instagram, WhatsApp, Facebook, different channels, right? Shopee. So I think like people have sort of adapted to different tools available to them to continue to do their business online or offline, right? In whatever ways possible. Uh, and I think the impact depends on category to category. It is not that all the businesses have been affected. The Pulsar businesses, for example, which is one of our major segment, has picked up a lot because everyone is sitting at home and consuming a lot of data and videos, and they just have a lot of spare time to do that, right? So that has gone shot up, but some others have fallen down, right? Overall, Indonesia, as a market, has 60 million MSMEs, and these 60 million MSMEs contribute to 60% of the $1 trillion GDP that Indonesia has, right? And what that means is these MSMEs are pretty much the backbone of the economy. So Indonesia government as a whole has been not too strict with lockdowns, not too aggressive on uh, closures of shops and all of that, versus, let's say, if you look at an economy like India, where there was a very strict lockdown for 2 months, you can't even get out of your house, right? So overall, we have seen, this because of the demographics and the sort of favor that Indonesia government shows towards these micro businesses, we have seen steady growth, and a lot of businesses are now coming online, and they start to understand the value of using digital payments, digital bookkeeping, selling things online, and and another thing that the pandemic has forced onto them is more around cash flow management, right? And that's what our app helps them do, which is, previously I could afford to not track my cash flows, and but now, because there is a severe credit crunch, and the cash flow is drying, the businesses are slowing down, people are becoming more and more cautious in terms of how they spend money, and then they also want to track that money, right? Money in, money out, expense, what is my cash flow this month, next month, how do I increase that, right? Through different modes. And that's where our BukuWarung app really helps them do all of that in a very simplified way, especially for the tier 2, tier 3, tier 4 cities and towns in Indonesia. And coming to the investors' point of view, right? Definitely, I think like post COVID, the investor risk appetite has gone down because of uh, primarily because there are signs of a global recession, and it's very uncertain of what is happening, right? And it definitely puts pressure on all the startups, not necessarily just the ones who are trying to raise funds. Even the ones who have raised funds, they are under check, right? You have to sort of ensure that you have enough cash flow, you're spending very frugally, you have enough runway of 2-3 years, and in our case, we have been fortunate to raise funds. Even like we raised from Kuna Capital, and then also we got into Y Combinator recently. That has completely happened while we were building the business remotely and in COVID, right? So we haven't even met our managing partner from Kona in person, because but very fortunate for them to sort of take that conviction and sort of invest in the growth that we saw. So I think overall, investors, there is a lot of money out there. Let me just put it very bluntly, right? There's a lot of money out there. As Gaurav and Nipun mentioned, you have to show that you are the right guys to go after the right problem, and then the problem needs to be a fairly large one, and the market needs to be fairly large. And in this case, in case of Nipun and me, that large market problem checks out because Indonesia is a huge market, and it's growing year on year, and it is the biggest economy in Southeast Asia. And then, after India and China, it's pretty much the next market for next emerging market for where there's like almost like 170 million internet users, right? So I think all of those factors do help when you sort of are deciding to start and which market to sort of go after.
Okay, so maybe I'll, we are heading towards a time for the extended session later. So, I'm looking at, 2-3 other questions from the attendees, and yeah, maybe I'll summarize it this way. And it would be great if all three of you could maybe answer that in short. As you decided to start and you've been here now, you've been doing this for a few months now, you've seen your friends do as well. Uh, what are some things that you thought are going to be extremely difficult that maybe turned out to be easy, and something that perhaps you did not anticipate would be very difficult that maybe surprised you? Uh, if any of you could start, maybe you could start with Nipun on this.
That I should have expected and prepped for. Because there's a few of those examples. I'm trying to think what's useful to, but there are, see, I think I alluded to this earlier about the similarities in the market structures of India and Indonesia.
Yeah.
But there are, actually what I think some of the things that I thought might be very hard, but ended up being a lot simpler is actually the adjustment of, so first, for quick context, right? We have a lot of our market team is in Indonesia. Our tech team is in India, right? So, and we've got some fantastic people in Bangalore who have come from different backgrounds and interestingly, not even met each other yet, right? So we actually were a bit nervous at going into this whole COVID lockdown situation, work from home. We have people in Jakarta, in Surabaya. I'm in Singapore, and the team is in Bangalore. How do you actually get a multi-geography team to work? It's been surprisingly efficient, and I think people rose to the occasion, and it actually ended up becoming a much simpler problem. Even the cross-cultural adjustment, I thought might have been a hiccup, but I think just given how the Indonesian culture is generally speaking welcoming, it's not been, as at least from what I can tell, it's been fairly seamless. So I think the cultural adjustment was probably the best positive surprise. In terms of negative surprise, I wouldn't call it negative. It's just a reality check of sorts. The segment that we are targeting, see, unlike India, Indonesia still doesn't have the digital payments push. And everything works on cash. Everything.
Yep.
So if you're in that target segment and you expect people will do UPI, bank transfer equivalent things, doesn't happen. Which means that you're always going to incur cash collection issues, and there's all sorts of operational nightmares that happen along with that.
Got it. What about you, Gaurav? Anything, any surprises, positive, negative?
I think the positive surprise was, frankly, fundraising. I mean, we'd not anticipated. I think Chinmay referred to this earlier, where there's a lot of money out there in the market. We had not, I remember doing my previous startup, and fundraising was just insanely hard. And surprising, I mean, it's a function of, again, we also know our investors for a while, and having been around, etc., and just money being available. I think fundraising was a positive surprise, that it went through somewhat smoothly, or at least maybe just a question of very, very low expectations and a not so unreasonable outcome, I guess. So I think fundraising was a positive surprise. I think a negative surprise, or more like, I guess we expected it, but it hits you when you start, there's a big emotional aspect of running a startup, which is everything. You need patience, you need to be persistent. In like B2B space, you need to be following up with customers a lot. And when you're working in a job, it's fairly clear. You're given, whatever, some version of OKRs, KPIs, metrics that you need to deliver on, milestones, etc. It's not that easy to track or think about, as a founder, if you are actually making progress, right? Like, and are you making progress at enough speed, etc. So I think the emotional aspect of persistence, patience, being emotionally stable, etc. That's not easy.
Got it. Chinmay, a quick one before we move to the next segment of the extended session.
Yeah, I think that building the team remotely was something that so building the team was something that was hard remotely, right? But once that conviction was there and the people joined, I think the operation of that team, like, day to day and, week to week execution, and how people executed, as Nipun mentioned, has been amazing. And people really take a lot of initiative in making you feel like, to stay close through online, right? Like, I mean, we haven't physically met. 80% of the team I haven't met, but we have hired them, and that has been a pleasant surprise. The hard part has been the hiring, and hiring high quality people in as part of this mission that we are on, right?
Got it. Great. So it was great, chatting with you all. I think we'll maybe wind this up here. There are some questions that I think most of them have been answered. The attendees, I mean, do feel free to reach out to the three of them on LinkedIn or wherever. If any of you has any lasting, I know it's cliche, you have done this at least 30, 40 times in the last 1 month, but you're entrepreneurs, you have to grind, sorry. Any lasting tips or something for the folks here? Should they start up in 2020, or is 2020 a bad time for the economy and they shouldn't?
There is no reason not to start. Okay.
Yeah.
And I'm just a firm believer. Like I said, it's an internal mindset thing. It's not an external thing. You can be in peak markets and raise a lot of money and build a crappy company if your heart is not in it. You can be in a bad market, and if your heart is in it, you can. In many ways, you're already shielded. People are giving everybody COVID discount right now, right? So if things go bad, blame it on COVID. Fine. At least it was worth a shot, right? So my view on this is always entrepreneurship is an internal looking thing, not an external looking thing. If an investor tells you leave your job and start up, don't listen to them. Do it only when you're ready. And irrespective, anyone tells you to do something, you're not going to do it because someone's told you. It has to come from within.
Got it. So I think that's a good stance to close at. So thank you everybody who joined. Before we end this, I would just request everyone to maybe open your cameras, and this is something we do in all our sessions. We always take a group photograph because we see a lot of people joining us from different parts of the world. So those are the attendees. If you guys could just just turn on your camera. Let's just see each other. You can see each other on the grid view. Okay. Once I see enough cameras on, I'm going to ask you to smile. All right, we've got a lot of cameras on. All right, give us a smile. Awesome. Thank you, everybody. Thanks for attending. You will receive a recording of this session in case some of you joined late or if some of your friends did not join. And we look forward to having you in another one. If you want to stay in touch, I am going to just put a shameless plugin of the ways in which you can stay in touch with us. You can follow us on LinkedIn, you can join our Slack community, or you can follow us on Twitter. We are growing our Twitter and Slack followership. LinkedIn is already quite active. So I'll give you all a couple of minutes. You can scan the QR codes and yep, see you next time. And Nipun, Chinmay, Gaurav, we'll maybe log into the next session, which you would have to see.